I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. And this is Bloomberg Crypto, a daily Bloomberg iHeart podcast. It's Tuesday, June 28th. One of the features that early investors in crypto would talk about a lot is something called correlation, or specifically, the lack of it. Correlation is a concept that refers to the relationship between different financial assets. You can think about this as if the gold price goes up and the price of oil also goes up, you might say that those prices are positively correlated. But if you're an investor looking to diversify your portfolio, you don't want everything going in one particular direction. And for a while, it looked like crypto assets might fit the bill. Over the past year, as inflation rates have begun to rise, not just in the US but around the world, the price of crypto has fallen in line with the price of stocks. What does that mean for crypto's supposed independence from other markets? Bloomberg reporter Vildana Hajric joins me for more. Vildana, thank you so much for joining us today.
Thank you for having me.
You are one of the folks at Bloomberg who write about pretty much everything in markets, I feel.
Yeah, just about.
Just about. And in that extremely broad and interesting remit that you have, one of the places you've been reporting on has been what's happening with crypto as it relates to what's happening with stocks. Can you talk a little bit more about that?
Yeah, I love looking at this because I love looking at the stock market, which I cover on a daily basis, and then also crypto, which is just its own little animal. But basically what's been happening this year, broadly speaking this year, is that we have really strong correlations between stocks, U.S. stocks, and cryptocurrencies. And when I am saying cryptocurrencies, I really mean Bitcoin, because a lot of people are just looking at Bitcoin, basically. Mm-hmm. And so what you're seeing is that on a day when stocks are up, you're very likely to also see Bitcoin going higher. When stocks are down, Bitcoin also very, very likely is going down. So we have this really strong correlation. The correlation is particularly strong between Bitcoin and tech stocks. And that's because a lot of strategists and analysts, when they're looking at these different asset classes, what they'll say is that both are sort of riskier. So you have a lot of tech companies that are high growth companies, high growth.
And high growth just means aren't necessarily super profitable, but are expanding very fast.
Exactly. They're expanding, they're spending a lot of money. The cash burn is really high, but profits maybe are out in the future. Everybody knows that crypto is really, really volatile. And so therefore you sort of just have both falling into the same category. And so these correlations have been really, really strong in 2022 because we've had this different Federal Reserve than what we've had over the last 2 years, where you have the Federal Reserve and, central banks around the world raising interest rates to combat persistently hotter than expected inflation. You're seeing these hotter than expected inflation prints. And so that's just not an environment that is it's not comfortable for crypto and for tech stocks.
Well, let's talk about why that is. Right. So when folks say, high interest rates are bad for tech stocks or high interest rates are bad for stocks, like what exactly is that directionality there? Why is the one leading to the other?
Well, if you have higher interest rates, it's just, the cost of doing business it becomes a lot higher. That's exactly what the Fed actually wants. Mm-hmm. They want to cool down growth because we just have been having inflation coming out hotter and hotter than expected for just a much longer period of time than so many people had been expecting. And so when you have this environment where it just costs more to be doing business,
basically anything.
Yes, basically anything. For tech stocks, it's you can sort of just look at it and think about, okay, we have these high growth names like we just mentioned where out in the future, their profits are just much further out in the future. And so in a higher inflation environment, those companies just don't fare as well. And then just as we mentioned, you have this correlation with Bitcoin because it is riskier. Just people think of it as being riskier. And so think about an everyday investor. Do they want to be owning something that's super risky that can sort of swing around based on macro trends and what the Federal Reserve tweets or an Elon Musk tweet? The flow of money is just not what we saw over the last 2 years, where the Fed was being much more accommodative in terms of, trying to stabilize the economy during the pandemic, where they were buying treasuries and just putting a lot more money out into the system. Now, they've put a stop to that. They're raising interest rates.
The labor market is extremely tight, and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 0.75 of a percentage point and anticipates that ongoing increases in that rate will be appropriate.
Here's the thing, though. This correlation persisted or existed before a higher inflationary and a higher interest rate environment. And that was despite the assertions of various folks in crypto, especially Bitcoin, as you mentioned, who would always say, no, the whole point of Bitcoin is to not be like anything else that's happening in the market. Why do you think even prior to this environment that you're describing where like all risk assets are moving in one direction, why was that not holding true? Why was Bitcoin not behaving in the way that people were expecting?
I love these arguments. I love hearing them. There's so many, and they tend to sort of change. Like the flavor changes depending on what's happening. So maybe, like 3 or 4 years ago, you were hearing a lot of people saying that you should own cryptocurrencies because, for Bitcoin, the supply is limited. Mm-hmm. So the idea is because the supply is limited, that it will act as a very good inflation hedge. 3 or 4 years ago, we had inflation in the US running at around 2%. Right now, obviously, that's very, very different. So really what should have happened had that panned out is that Bitcoin would be performing a lot better during a higher inflation environment. These are just theories. They're arguments for owning
arguments
crypto.
Is the right word.
Arguments, yes. I mean, you have a lot of scholars who just look at this sort of on a longer trend. I know I've talked to some professors and scholars who've looked at gold, for instance, mm-hmm. where you just have a much longer history to study. And they had been warning all along, like, maybe this really isn't the case. Maybe
Bitcoin is not digital gold.
Exactly. And, wait to see how things pan out, especially wait to see what happens during crashes. And so now we really do have it not holding up as well. And at the same time, we have really high inflation, 40-year high inflation.
In the U.S. at least.
In the U.S.,
there are
yes.
other countries who are like, that's cute.
Yes. We'd love that.
We've seen this before. Thank you, Vildana. We'll be right back. What about the idea that the institutionalization of crypto, which means like more traditional, bigger investors moving in, contributes to that correlation with stocks? How does that work in practice?
This is a huge component of this. This is a really big factor, I think, because over the last 2 years, I would say largely 2021 is where you had a lot of institutional investors coming in, becoming more interested in crypto. Maybe in 2018, 2019, they were writing it off. They were saying it's way too volatile. I don't want to be involved with this. Then you saw crypto taking off during the pandemic, again, because we had really loose, accommodative monetary policy from the
low interest rates, in other words.
Low interest rates, yes. And they didn't want to miss out on what had been happening in 2020 and in 2021, where crypto prices were just skyrocketing. It was the hot thing. It was really trendy. Everybody wanted to be in on it, whether retail or institutional investors. So having institutional investors be a big player in the space definitely contributes to this idea that the correlations with stocks and crypto are just much tighter or stronger in recent months than they had been.
And is
previously.
the reason for that institutional investors just like buy and sell way more? And
right.
So they have that ability to move markets in one direction or another?
Yeah, it's really hard actually to break down. Like, I think people are obsessed with figuring out like what proportion of, if you're looking at Bitcoin, for instance, like, is it retail? Mm-hmm. What proportion is institutions? People love looking at this and into this.
And having arguments about it.
Having huge arguments about it. Retail investors definitely got hurt during this sell-off. So we had Bitcoin hitting nearly 69,000 at the end of November 2021. It's fallen something like
more than
40, 50%. Yeah, exactly. So definitely there's a lot of people who have lost a lot of money.
Because they bought at the high.
At the high.
And now if they're selling at a pretty decent low.
One really interesting thing that to be looking at to figure out sort of like who is getting impacted is you can look at a number of different measures, like this one is wonky, but like in the money measures where you're looking at the percentage of Bitcoin addresses that are in the money, meaning people who bought Bitcoin at prices lower than current prices. And that has really been trending lower during the decline, meaning that people are just, sometimes maybe they've just had enough and they sell their Bitcoin or their crypto holdings.
Even at a loss.
Even at a loss.
And so the reason you're able to do that is because, of course, all these transactions aren't public, or at least they are accessible if you know what you're looking for.
Yeah. I mean, that's what the whole blockchain is. You're supposed to be looking at this sort of public ledger. It's supposed to be very transparent and open where you can see how money is moving around.
You talk to investors all day long.
Yes.
What is the
fun,
vibe?
By the way.
What is the vibe?
So I talk to investors who, like stock market investors as well as crypto people. It's really, within crypto, again, going back to those arguments that you might be hearing, like it's an inflation hedge, things will pick up, things will be better. A lot of times you'll hear some of those arguments where, maybe they're basing things a little bit more on sentiment than what's actually going on. On the stock market side, just about everybody I talk to, when they're talking about crypto, they always are tying things back to correlations and how Bitcoin on its own isn't really independent, so to say.
Doesn't that become a self-fulfilling prophecy, though? Where you if you believe a thing is correlated, then you're like, well, it's going to move in this direction, so I might as well.
I might as well. Yeah, I might as well. A little bit, yeah. That's a good point.
The hive mind of markets. One of the stories that you wrote recently, because you went wonky, let's stay there, but one of the stories you wrote recently was this idea of one of the most profitable trades in crypto was buying and selling at a time when the stock market was actually not open because Bitcoin trades 24/7. How did that work as a trade?
This is so fun. This is super interesting. So we know crypto trades 24/7. It's trading every single day of the week, even on holidays. We have it trading internationally across hundreds of exchanges. The stock market is open Monday through Friday, 9:30 to 4 p.m. New York time. And so if you separate out those hours, that time span, and look at how Bitcoin tends to perform during those hours versus the so-called after hours when U.S. markets are closed, you actually see that Bitcoin doesn't fare as well when U.S. markets are open, and then it holds steady. It sometimes it does really well in these so-called after hours. So this is the after hour effect is basically what it's been dubbed. Where on weekends maybe you can see it rallying and having happy times, and then as soon as
the U.S. investors wake up,
as soon as they wake up, it's like ugh. So so this is really, really interesting. There's a couple of different theories on what's going on. One, for instance, is that news continues to come in overnight, so traders have to keep pricing all of that stuff in. Another is if U.S. stocks are closed and you're a trader and you're still very interested in seeing what's going on, you're forced to look at crypto. This is literally
the boredom effect.
Yeah, I mean, the board markets.
Trader hypothesis.
Yes, exactly.
Coined here.
Yes. And we're very trendy, where they're forced to look at crypto because stocks are closed. Another is that maybe you just have a lot of international investors who are more willing to take on greater risks. A lot of international exchanges might let you use a lot more leverage, for instance.
Way more margin.
You can just be a bit riskier with your bets. The fourth one, which I've heard from a couple people now, is we just don't know. These are just theories. Nobody knows. I like to say it's aliens. So again,
animal
just
spirits.
Yes, exactly.
All of the usual things that we resort to when we have no idea why something is happening.
Yeah, exactly. But again, it just goes to show this correlation and just how Bitcoin is moving during U.S. hours when U.S. stock investors are up and about and doing their thing.
All right, y'all. You heard it here first, the board trader hypothesis of correlation.
Yeah, we were the first.
We were the very first. Don't Google it, just in case anyone else has said it before.
Don't ask anybody about it.
Amazing. Thank you, Vildana. It was such a pleasure as always.
Thanks for having me.
You can find more of Vildana's reporting on the Bloomberg terminal, on Bloomberg.com, or find her on Twitter. She's at Vildana Hajric. That's Hajric. On the next episode of Bloomberg Crypto, we'll take a look at where the UK stands when it comes to protecting crypto investors from fraud, scams, and abuse. Bloomberg reporter Will Shaw, who's based in London, will join me for a conversation about where the UK is and where regulators think it should be when it comes to keeping consumers safe from crypto risks. I'm Stacey Marie Ishmael, and this is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Email your questions, comments, or suggestions for the show to crypto@bloomberg.net. And you'll find us on Twitter @crypto. The supervising producer of this episode is Vicky Vergalina. Associate producer is Zanab Siddiqui. Associate producer is Ty Butler. Desta Wonderad is our engineer. Original music by Leo Sidran. Bloomberg's head of podcasts is Francesca Levy.